The market spends the majority of the time consolidating and basing ranges, and this is the best way to make money trading them. Basing range structures offer areas for powerful trade setups that are very high win rate and see strong follow through. Now let's talk about how to identify these ranges. The market cycles between periods of consolidation where price bases inside a range structure, followed by periods of trend when price breaks out of the range structure. The longer the period of consolidation, the longer time spends inside of this base, the larger and more powerful the trend move is when it breaks outside of the base. Once the market establishes a basing range, for intraday trading, you always need to be aware of where the edges of the structure are, and we can use this structure for very high quality trades. This identifies areas where you want to be managing your long and short positions or runners, and you do not want to be getting long into the range highs, and you do not want to be getting short into the range lows. Typically, you can expect to see the market form these basing ranges after a large direct trend move here, and let's talk about how to identify the edges of these ranges. You have a trend move, and generally the range lows are generally established by the first significant bounce after this trend move in this area here. Then after we have a bounce, the first rejection, strong rejection on higher time frames that's rejected down back in towards the lows, establishes the range highs. Now this can be a little bit flexible and may be adjusted as you get more price over a few hours or a few days, but generally that sets up the initial understanding of where the range high is and where the range low is. As the week goes on, you can get more confirmation. As price continues to respect the edges of this range, you see we have another test that's rejected and sends it all the way back down towards the range lows. So this gives you a little more confirmation that this area is the range high for this new basing range, and this area also still respecting support, getting reactions and bounces here at the range lows, just giving you more confirmation as you have more price to deal with. So now, once we have a little more established idea of where the range high and the range low is, here's how you want to use these structures for your intraday trading. Once you have an established basing range, here are the rules you want to follow. Fade the edges, don't overtrade in the middle, get long on a look below and fail, look short on a look above and fail. You want to be looking for bounces near the range low support and rejections near the range highs, so you can consider shorts at the top, longs near the bottom, but you do not want to be getting long right up in here into supply, and you do not want to be getting short as you're coming into demand here at the bottom. The best trades off of these structures are when price tests underneath one side and then is unable to continue and traps, or a look below and fail of the range lows, which then favors a traversal all the way up towards the range highs. The range traversal is one of the most powerful setups you can get. Now we actually took this look below and fail, the same trade 3 different times in our service inside of this basing range. So what you're watching for is a flush below the range lows, something at least 5 to 10 or more points, and then you're monitoring for continuation lower. If price cannot continue lower and tries to hold back above the range lows, I'm watching for a long entry. So here we see we have the flush, we are unable to continue lower, price comes back. I'm looking for price to hold above the range lows for 5 or 10 minutes. Then I'm looking for a long entry here, risking some structure with a stop below this candle here, and I'm targeting the midpoint of the range. Then I'm leaving runners for the full traversal up into the range highs. So we actually took that same trade here, and then again over here for the full traversal up, where I'm taking partials into the mid pivot, and then we did get the full traversal into the range highs, each one of those setups. And we actually also took the inverse of that setup for the look above and fail. What you're looking for is price to spike above the range highs, unable to see continuation higher, price fell back down below the range highs, and then a little check back into resistance that was rejected, and you can enter underneath the rejection, risking a few points above the highs, targeting the midpoint of the range, taking profits here and leaving runners for the full traversal through the range. And we covered our short here into the range lows for about 80 points. Now as you can see, the other factor of these basing range structures is that the highs and lows tend to hold many more times than a normal support and resistance. You can see tests and look below and fail many times over and over again, whereas normally a support would be weaker and would eventually fail. When it's an established range structure like this, it tends to hold many more times than normal. So basically every time you see price flush and reclaim here, you want to take the look below and fail every time until it quits working. You can consider the same thing at the top of the range with the look above and fail. Now if you aren't part of a community of traders, you should click the the WAP link in the description, join our free service, learn from real traders who are trading these setups every single day. Another factor to keep in mind when you're trading inside of these basing range structures, you don't want to engage a whole lot of trades in the middle. It tends to be very trappy and choppy around the pivot in the middle. You really want to focus only on initiating trades near the edges. These are where your much better quality trades are. Over trading the middle of a basing range will get a lot of traders trapped and chopped up. Now this is a multi-day basing range structure. You can see some of these that are multi-week. Some of them are shorter and longer than others, but these are high time frame structures. So when you're trading these intraday, you want to be looking at these on a 15-minute chart, and when you see price flush and try to recover, you have to give these time. You have to give these 5, 10, 15 minutes of time to show you that buyers are able to hold above these spots. That's when you get the look below and fail. These are not trades that are going to be executed on a 1-minute chart. You need to keep this in mind. These are higher time frame structures. They're going to take a little bit longer to set up the entry. The other way to use these range structures in your intraday trading is knowing when a base finally does break through the range. You don't want to counter trend trade, because after we've had all the consolidation inside of this range, once it breaks, we expect to see a trend move. So if the base breaks to the downside, typically you want to find a way to get short or sit on your hands. You don't want to be trying to long immediately after a base breakdown, especially if it's a multi-day or multi-week base. If it breaks to the downside, you don't want to start trying to catch knives. Don't try to take longs in the first few hours or the first day after a base that breaks to the downside. The same thing goes if a base breaks to the upside. You don't want to step in front of a trend move, in front of momentum up, trying to short against the trend here. That's a very powerful move. It spent several days, several weeks inside of a base. There's a lot of stored energy after that. You don't want to be counter trend trading once it breaks the range. If it breaks to the downside, don't try to knife catch, but if it reclaims, you can get back in long on the look below and fail. Wait for it to reclaim the range before you go long. Using these high time frame structures is crucial to being a profitable trader. Keep these basing range structures in mind, follow the basing range rules, take your trading to the next level.